The bloodbath in commercial real estate is getting deeper. It's so bad, even regulators, who are normally a banker's most loyal pet, are sounding the alarm. A few days ago, the Financial Times of London reported that loan loss reserves, so that's money that banks set aside to cover bad loans, have soared at the largest U.S. banks, to the point that reserves against bad debt are down to just 90 cents on the dollar. That's down from $1.60 last year. So down by half and right into the red. What's driving the red ink is a, quote, sharp increase in late payments on office buildings, shopping malls, apartments, and other commercial real estate. Late payments are pretty much the last step to default, so that's threatening potentially hundreds of billions of commercial real estate loans. This has doubled delinquent commercial property debt at U.S. banks over the past year, and it's actually tripled at the big six megabanks. In fact, out of those big six, Goldman is the only one who has more reserves than bad debt. Bank of America, the second biggest bank in the country, has just 60 cents on the dollar, which they recently cut since Daddy needed to fatten up the profits. It's worth mentioning that American banks' commercial real estate loans total roughly $560 billion. It's actually much worse for the smaller regional banks. Their commercial real estate makes up fully 1/3 of their loan book. In other words, about 1/3 of their assets. If those drop, the bank could collapse. In fact, that's already happening. Just a few weeks ago, New York Community Bank plunged by half after reporting hundreds of millions in previously undisclosed commercial loan losses. It was essentially bailed out by the major banks, yes, the very same ones who've got 90 cents on the dollar of reserves. There will certainly be more to come. So what's next? Brought to you by Unchained.com. In recent videos, I've talked about the disaster in commercial real estate, partly because COVID made a lot of companies switch to work from home, and partly because of the stagnant economy. So economic booms drive up the price of office space, and when the boom ends, prices go down. But the cherry on top has been America's, quote, urban doom loop, the willful destruction of our cities by socialist revolutionaries who want criminals to run free, presumably to accelerate the revolution, or perhaps just to buy activist goodwill. Unfortunately, none of these things are improving anytime soon. The economy is going deeper into stagflation. I've mentioned major companies are now implementing mass layoffs, and the major cities are, if anything, getting worse. Given all this, loan reserves could turn out to be just 50 cents on the dollar. So, expect more bank bailouts, more bank takeovers, and more crony programs like the Fed's so-called Bank Term Funding Program that effectively pre-bail out the bankers every time they screw up. When the smoke clears, we could see dozens of major regional banks disappear, gobbled up at taxpayer expense by Wall Street's too-big-to-fail Borg, leaving them free to strip mine the economy and hand the bill to the rest of us. Okay, we'll be watching. See you next time.